Welcome back to tonight's Check Yourself Before You Wreck Yourself edition of Mad Money. I'm a big believer in the idea that once you get some money saved up, you are in control of your financial destiny. But that also means you need to be very careful because you're the one with the most power to derail your financial future. Look, mistakes always be part of the investing game. You can't rule them out. You can't outlaw them. I just want to be sure that you don't make the same mistakes twice or three times, or endlessly for that matter. And that's why I have rules. Rules for investing to protect you from the kind of misjudgments that I used to make when I was young and inexperienced. Rules like, for example, don't own too many stocks. Buy. Back at my old hedge fund, I would spend 3 hours every day analyzing the mistakes of the day before. And you wonder why I retired. Made myself sick to my stomach every single day. That was my major task, one that I complete every morning before anyone else came into the office. And I do it generally between 4 a.m. and 7 a.m. Some people are night owls, I'm an early morning owl. I would analyze every losing trade. You don't need to analyze the winners. They take care of themselves. I try to figure out how I could have made more money or, much more importantly, lost less money. I was, for lack of a better word, maniacal about it. And after a couple of years, I had an epiphany. I realized that good performance could be linked directly to having fewer positions. In short, when we own fewer stocks, we tended to make more money. It was just axiomatic. And that's why, ever since, I won't buy a stock without first taking a different one off the table. And I try to do that for my charitable trust, which is the only way you really can do it these days. You don't just buy shares in more and more companies. You need to limit your holdings. That's a great discipline and one you should adopt pronto. All the bad money managers I know of have hundreds of positions. They can't keep track of those. I don't know how the heck you're even supposed to stay on top of more than 30. All the really good money managers have a few names that they know inside out, which means they can buy confidently on the way down when the market goes awry. That's why I say don't own too many stocks. Now, I know it can be constraining. You'll end up selling some stocks that are good for stocks that aren't as good. I know that. Hindsight's 20/20. But take it from me. As someone who's owned stocks for 40 years, it's far more likely that you'll be selling marginal companies in order to get bigger in better ones. That's how to make a portfolio really work for you. That's portfolio management. You don't want to be a mutual fund manager, right? You might as well give it to an index fund. By the way, the time I lost the most money as a hedge fund manager, my sheets, my positions were thick as a brick. When I made the most money, my sheets were, well, one sheet of paper double-spaced. And I ran hundreds of millions of dollars. So please remember, whether you're a pro or an amateur, it's almost always possible that you have too many positions. Rule of thumb, if you're just investing for yourself and you own more than 10 positions, that's right, if you own more than 10 stocks, maybe you ought to pare back a bit. So you can have too many stocks, but you know what it's very hard to have too much of? Cash. Which brings me to my next rule. Cash is for winners. The widespread aversion to cash in this business breaks my heart. At times, cash is such a perfect investment that it drives me crazy how so few people recommend it. Nah, they hate the market, so they're only 95% long instead of 100%. Or they think the market stinks, so they decide to short a few high flyers against their longs or positions they own. No, no, and no. As an investor, that is absolutely the wrong way to approach things. You don't like the market? You don't like any sectors? Then sell stock. Raise cash. Don't buy put options on the stocks you own or find other stocks to short against your current positions. The odds simply do not favor you winning on both stocks, the short and the long. It's a strategy whose goal is mediocrity. But if you can raise some cash and put it to work at lower levels, that's the best way to protect yourself against a lousy market. Let me tell you a little story. Now, I was one of the biggest option traders on Wall Street for a time. And I can tell you that when I bought put options to hedge my positions, I almost always ended up losing money. When did I make money? When I bought put options to profit from low-quality companies that were going to have, I thought, shortfalls, or stocks that seemed hopelessly overvalued versus the fundamentals. If you dislike the market, you don't need to bend yourself into pretzels to hedge against downside risk, though. Just sell some stocks and go into some cash, which is literally short-term treasuries of the less-than-a-year variety. People start talking about how little cash earns, although it's sure earning more than it did a while ago. Or they say, can't be in cash, that's for losers. No, cash is for winners, especially if you think there's a major disaster ahead or the market's going to have a prolonged sell-off. Now, I grew up in a different time. I only shorted when I had an edge. I can't short it all right now by contract, not even for the charitable trust. But back when I could, I didn't short stocks for the sake of having some shorts on against the longs. I don't care about not having enough exposure. I care about not losing money. So if you don't like the market, if you think there's nothing compelling to buy into any weakness, I suggest that you sell stock and raise cash. Go sit on the sidelines. Nothing wrong with that. Wait for the situation to improve. Believe me, it's never the wrong call when you don't like the tape or you can't find anything that truly makes sense for you. The bottom line, always be careful not to own too many stocks and not to have too little cash. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.